Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So yes, Bitcoin on the 4-hour, we are back testing into our support area now, our support zone. Just extend that box along there. Yeah, back testing into it. What we need to do, what we need to see is we need to get supported. We need to hold this region. We can't basically break below 19,500. If we do, then yeah, we're gonna clearly open up quite a bit of downside, basically down to the bottom half of our sideways range of 18,500. And then you never know, armed with the people that have been buying, armed with the FOMO buying that we've been having, if those people then all dump and then give up, we could then actually break down through our 18,500 level. So there is all to play for both the bull and bears here to hold the line here, or to drive us down and make this look like a swing failure or failed attempt basically to break to the upside. We'll have a look over there at the stock markets. They are similarly rejected at basically their overhead resistance. So they need to turn around and turn back up. Obviously, they could move down to this support area, but they really do kind of need to hold exactly where we are at this just above this recent high that we had previously. But yeah, the 10-year also, we'll have a quick look at that. Fully broken below our trend line, however, only really looking only really looking like it's kind of pulled back as much as this pullback here, where we then were basically supported and continued upwards. So we have had moves of this, pretty much of this magnitude, down in the yield, only to then continue to the upside. So yeah, pretty important point we're at now as well. You can see this area of support we've got down here that we did bounce off, and we've got this area of previous support which hopefully will provide resistance and then send us lower. But I guess until we are below basically this recent low, below this level, yeah, I mean, the bulls certainly have a chance of breaking us just above this level, which is not far from where we are now. I say the bulls, it's the bulls in the yield, so it'll be the bears in the price have a chance of obviously breaking us higher. The DXY as well, that was it. The DXY in back testing into resistance as well. Didn't manage to obviously hold below this level, but this is the more important resistance area. So yeah, I mean, if we get back above here, realistically, if we get back above here, we can probably draw a trend line, a sort of rough trend line on here, where this would be a target to get to. And then if we do break through that, then yeah, I mean, just onwards and upwards to new highs. We could probably draw a trend line to the downside as well, probably draw a descending channel. Maybe we do form a descending channel over time here, and it ends up being one great big massive bull flag that ultimately then breaks to the upside. Yeah, it's difficult to see where exactly to draw this in. We are just basically connecting these two lows. But yeah, we won't draw that in. But yeah, this potential trend line to the upside, if we get above that, then that could trigger just onwards and upwards to new highs. So realistically, we need to get rejected here, if not at the trend line, and then trade lower. So we can have a nice rally in risk assets into the end of the year. We can get our Santa Claus rally. Oil back into resistance area, just easing off that area a bit, but yeah, I mean, overall, I think I said before, I do think chopping between this area is about fair value for this. Obviously, if something happens in the geopolitical sphere, could certainly drive us higher. And then obviously, similarly, like just greater increased global recession fears will drive us lower. But in the meantime, I think those forces are pretty equally balanced. What else? Ethereum Satoshi pairing easing off obviously from this resistance level. It did kind of look like this was where we're going to top out, at least for the short term, maybe even medium term. Similar with the USD one, the USD value did look like this is where it would top out. So yeah, ideally we want to hold above this support here. If we do that, hold above, trade sideways in this range, that won't be the worst thing for price, clearly. And then if we can then break and continue upwards, that would be great. But obviously if we do lose this support, then yeah, we're looking well, basically coming back down to our lows. And then obviously if we're testing our lows, that's when we have the opportunity to break our lows. What else? Yeah, I mean, that is about it. If we want to watch Bitcoin itself, it kind of needs to hold where we are now. If it doesn't, it's gonna get pretty dicey. Let's see if stochastics are gonna help us out. 4 hours still downward pointing with room to run, so that is not ideal. 12 hour is freshly turning down from a high level along with daily, but the higher time frames, bi daily looking absolutely great here, 3-day looking great, 5-day looking good, weekly looking good, and bi-weekly turning up from a low level looking good as well. And then obviously monthly not done much yet. So I mean, we've got a chance of holding this support area, even if we kind of grind sideways a bit, and then those higher time frame stochastics can drive us onwards and upwards. And then yeah, I mean, if they then really get going to the upside, especially this 5-day weekly, bi-weekly, we could be seeing a really decent rally to the upside. So yeah, that is what we are looking at. We know our points of failure. We know what we need to do. The bulls know what they need to do. So yeah, let's see how this Friday plays out. Obviously, we've got a decently impactful economic data. And then we do have all the shenanigans that may surround the midterms as well in the next week or so. So yeah, there could be some volatility. Obviously, we kind of know it's a bit of an unsaid truth that we know that they are painting the chart. The Fed is getting pressure to paint the chart for obviously the elections, because he don't want to make Biden look any worse than he's already made himself look. So obviously that is a bit of a risk factor at once it's all done and dusted, because there will no longer be that urge to hold them up, especially if Republicans do well. They may then just want to tank it just to make them look bad, because that is the petty world that we live in. But that is it, guys. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.